It's the end of another year, and what a year it has been. 2024 was a weird one performance-wise, with the markets giving everyone something, whether you were bullish or bearish. The broad indices showed a good year overall, but a closer look revealed some concerning trends in certain market corners. Where things go from here is anyone's guess. But amidst all the uncertainty, there's one thing that remains constant: Zerodha's commitment to its core values. We turned 14 this year, and while the industry looks nothing like it did when we started, we've stayed true to our core philosophy. Even though things are changing quickly and it's tempting to follow every new trend, we stick to our core values and beliefs. Nitin recently talked internally about the Japanese concept of shinise, or old shops, and how Japan has some of the oldest and most resilient businesses in the world. Their secret? Sticking to what they are good at and investing back into the communities that enable their success. It's a philosophy that resonates deeply with us at Zerodha. At Zerodha, we focused on providing the best platforms for traders and investors, evolving our approach but never straying from our core mission. We believe in doing what we are good at and partnering with smart entrepreneurs for the rest, which is the idea behind Rainmatter and our investments. And as we've grown, so has our sense of responsibility to our customers. As a mature financial institution entrusted with the savings of over 1.5 crore Indians, we take our responsibility seriously. Financial services are built on trust, which takes years to earn but a moment to lose. We think deeply about what our products and services mean for those who trust us, and we always prioritize their best interest over quick fixes and shortcuts. Our philosophy from day one has been: do not do to others what you don't want to be done to you. This means no stock tips, no pushing people to trade, no spamming, and nothing that isn't in our customers' best interest. We want to grow with you as you grow in life, being there for you whenever money is involved. This is what we have done, this is what we will do more of in the future, and this is what you should always expect from us. It's a commitment we take seriously, and it's reflected in the work we did in 2024. 2024 was a busy year for us at Zerodha, with numerous product, service, and educational initiatives. But it wasn't just a big year for us, it was a significant year for the entire broking industry with several regulatory changes. 2024 brought a wave of regulatory changes that affected pretty much everyone in the markets, from retail traders and investors to brokers and market infrastructure institutions. Perhaps the most consequential regulations were those aimed at reducing speculative activity in the F&O segment. Here's a quick summary of these changes. From 1st December, weekly expiries were limited to one contract per exchange and only one benchmark index, Nifty 50 for NSE and Sensex for BSE. All monthly expiries of options contracts of an exchange now happen on the same day of the month, limiting the regulatory arbitrage of trading weekly expiries in other index contracts on the last week of the month. To discourage excessive activity on expiry days, an additional margin of 2% of the contract size was imposed on all short option contracts. All index option contracts saw a 2 to 3x increase in lot size effective from Jan 1st. The calendar spread margin benefit on expiry days was removed effective from Feb 1st. SEBI prescribed client and broker-wise maximum open interest position limits, about 5% of the total OI on a client level and 15% for brokers. Initially monitored for violations at the end of the day with additional margin and blocks and penalties, this is now done intraday to ensure traders don't violate the limit during the day. SEBI mandated that from Feb 1, 2025, an option buyer needs to pay the entire option premium upfront, curbing the excessive leverage some brokers offered while trading intraday options where the risk of the underlying contract is already being traded. At Zerodha, we have always collected option premium upfront as a healthy business practice. These measures led to a 20 to 30% drop in F&O activity on the exchanges and across brokers since their implementation. With most of these measures not yet fully implemented, their full impact will be felt next year. Assuming markets remain sideways, it's fair to assume that F&O trading will dip even further. F&O trading isn't the only area cooling down. Equity turnover, number of trades, and value of shares deliverables are all back to levels seen in late 2023 and early 2024. While still above pre-pandemic levels, the market frenzy seems to be ending, and we might be returning to sanity. Beyond F&O regulations, 2024 saw several other important regulatory changes. SEBI mandated all market infrastructure institutions like stock exchanges to be true to the label in how they levy charges. This circular has a significant impact on brokers, traders, and investors. Until recently, stock exchanges charged transaction fees based on overall turnover contributed by brokers. At the end of each month, brokers would be given a rebate. That is the difference between what the brokers charge the customers and what the exchange charges the broker at the end of the month. Starting from October 1st, this was disallowed and a uniform transaction charge was introduced across all brokers. In the 2024 budget, the finance minister announced an increase in STT for F&O contracts of about 60%. This amounts to STT of Rs 1000 per crore, up from Rs 625 per crore of future sell turnover. STT of Rs 5000 per crore, up from Rs 3125 per crore of option sell turnover. Long-term capital gains or LTCG tax increased from 10% to 12.5%. Short-term capital gains or STCG tax increased from 15% to 20%. Currently, when you buy or sell a stock, the securities are settled through the broker's pool accounts. With this change, the clearing corporation will directly settle the stock to your demat account. These regulations are a step further in making securities trading safer for investors, as stocks don't need to hit the broker's account for a day in between. The implementation of this has been delayed because market infrastructure intermediaries were facing issues. SEBI brought in changes in how the dynamic price bands for stocks in F&O are relaxed intraday. These changes involve sliding price bands, stricter criteria to flex price bands, and much more. SEBI has restrictions on how much AMC can be charged for a basic services demat account or BSDA. This used to be 100 rupees for holdings value up to 50,000 rupees and rupees 300 for holdings value of up to 2 lakh rupees. SEBI increased these thresholds to rupees 4 lakhs and 10 lakhs respectively. In September, SEBI increased the number of securities in the T+0 segment from 25 to the top 500 in terms of market cap. Unfortunately, this will create a separate T+0 segment alongside the one for T+1 settlement, even though the same securities will be traded in both segments. This might create fragmented liquidity, and it's not sure how this segment will take off. In September, SEBI approved changes that make it easier for people to become registered investment advisors and research analysts. This was a big change. Currently, we have just about 800 RIAs in India, and these new changes could transform this landscape. We have written a comprehensive post explaining all these regulatory changes. You can find the link in the description. Now, what does this mean for the broking industry and the markets as a whole? It's very easy to predict what happens to the broking industry. The industry's fortunes are tied to what the markets do. If the markets will do well, we will. But having said that, it's possible that the glory days of the industry are behind us. Things might soon revert to the mean. This is due to both the new regulations, which will have a significant impact on revenues, as well as the fact that Indian markets going forward may be subdued. But regardless of what the future holds, one thing is certain. Zerodha will continue to stay true to its core values and put its customers first. It's a commitment we made 14 years ago, and it's one we'll continue to keep no matter what challenges lie ahead. 2025 will certainly be an interesting year in all senses of the word, and we are looking forward to it. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Brokerage will not exceed SEBI prescribed limits.